Have you ever seen a spring compressed so tightly that it feels like it might snap? That is exactly what we are looking at on the weekly time frame for Quant right now. We have been stuck inside this symmetrical triangle since mid-2024. For this entire extended period, price action has been coiling, getting tighter and tighter, frustrating the bulls and trapping the bears. But something recently changed. While the price is sitting quietly around $80, the fundamental landscape just shifted underneath our feet. We have the United Kingdom formally recognizing digital assets as property, effectively greenlighting institutional flows. And we have a confirmed timeline for the Overledger Fusion Mainnet hitting this quarter. The last 3 times we saw this specific signal on the Heikin Ashi RSI, the price rallied 84%, 156%, and 130% respectively. I'm not here to sell you a dream, I'm here to show you the data. Today, I'm breaking down exactly where I'm loading my bags, my invalidation level, and the 5 specific targets I'm watching up to $495 for this year. Let's look at the charts. Welcome back to the channel. Before we get into the heavy technicals, let's set the stage. Right now, Quant is trading right around $80. If you have been holding this token for the last 6 months, it has probably felt like watching paint dry. We saw that dip down to $50 back in October 2025, and since then, we have just been grinding slowly back up. Sentiment in the market is mixed. A lot of retail traders have moved on to flashier, high volatility plays, leaving the utility tokens like Quant in the shadows. But this is exactly the environment where position traders like us make our money. You don't buy when the candle is already vertical, you buy when the volatility is dead and the structure is building. The market is currently overlooking the fact that we are sitting right on top of a massive support zone, and the moving averages are compressing in a way we rarely see. Most people see a boring chart. I see a loaded gun. But to understand why this specific level at $80 is so critical, we have to understand the news that just dropped, because it provides the fundamental fuel for the technical move I'm expecting in 2026. Let's look at what's actually happening behind the scenes, because the disconnect between price and progress is wider than I have seen in a long time. First, look at this update from late last month. The United Kingdom has officially passed the property bill, granting it royal assent. That's not just a press release, this is law now. It formally recognizes cryptocurrencies and digital assets as personal property under UK law. Why does this matter for your portfolio? Because institutions cannot trade uncertain assets. They need legal clarity. This legislation sets the UK apart as a global leader for digital asset regulation, creating the exact certainty that banks and large enterprises need to start moving billions of dollars on-chain. And who's positioned at the center of this UK ecosystem? Quant. Now layer that legal foundation on top of the technology roadmap. We just got confirmation that the Overledger Fusion Mainnet is scheduled for the first quarter of 2026. That is right now. We are talking about secure cross-chain asset and data movement going live on Mainnet within the next 90 days. Alongside that, they are launching the Trusted Node program, which introduces staking rewards for network security. This is a massive supply sink. And it gets bigger. Look at this diagram regarding the European Central Bank. Quant is explicitly positioned in the interoperability and orchestration layer for the digital euro system. We are seeing the convergence of the Bank of England's RTGS renewal, the Bank of Japan's CBDC infrastructure, and the digital euro design phase all aligning in 2026. As we can see from the summary of 2025, Quant's Overledger has quietly become the foundation for UK tokenized sterling deposits and Oracle's blockchain offerings. The infrastructure is built, the rails are laid, and now, the trains are about to leave the station. Even on the smaller business side, with the QuantFlow integration into Zero, they are automating payments and funding for SMEs. They are attacking the financial system from the top down with central banks and from the bottom up with business accounting. The fundamentals are screaming growth, yet the price is still compressed. That is the divergence we are going to exploit. Now, let's see what the chart is telling us. This is the weekly chart for Quant USD. The first thing you need to notice is the moving averages. Look at the blue lines. Those are the 10 and 21-week exponential moving averages. Then look at the purple 55, the yellow 100, and the green 200 simple moving average. They are all compressed together in a tiny range right around this $90 mark. When moving averages compress like this, it indicates that volatility has hit a significant low. It is like a beach ball being held underwater. The energy is building up, and physics dictates that it cannot stay down there forever. We are currently trading below these averages, but we are hugging them tightly. A weekly close above the 21 exponential moving average, which is sitting just above us, would act as the spark to ignite this compression. Price action is trapped inside this massive symmetrical triangle. The upper trendline resistance has been pushing us down since the highs of 2024, while the lower trendline support has been catching us since the lows. We are getting very close to the apex. Typically, these patterns resolve with a violent move in the direction of the breakout. The point of control on the volume profile is sitting at $100, acting like a magnet. If we can punch through that, there is very little volume resistance above to stop us. Now, here's the alpha. Look at the Heikin Ashi RSI at the bottom of the chart. I want you to focus on the white circles I have marked. Every time this indicator hit the oversold zone and started to curl up, we saw massive expansions. In 2023, it led to an 84% move. In 2024, we saw 156%. Even last year, we got a 130% rally from this setup. Right now, we bounced from the oversold region in November, touched neutral, and we are hovering in that potential reversal zone again. I have drawn a descending trend line on the indicator itself, indicated by the orange dotted line. If the RSI breaks that trend line to the upside, that is our confirmation of momentum shifting. We are looking for a higher low in the indicator to confirm the bulls are stepping back in. So, how am I playing this? I'm not guessing, I'm executing a plan. My load zone is strictly between $70 and $90. We are in that box right now. I'm accumulating spot positions here because the risk-to-reward ratio is skewed heavily in our favor. However, we must protect our capital. I have a hard invalidation level at $65. This is the red dashed line on the chart. If we get a confirmed weekly candle close below $65, this symmetrical triangle structure is invalidated, and the probability of a drop back to the $50 region increases significantly. For my short-term trading bag, I'm out if we lose $65. For my long-term cold storage bag, I'll simply look to reaccumulate lower at $50. But for this specific trade setup, discipline is key. Now, let's talk targets. If we get the breakout, I'm not selling everything at once. I'm scaling out into strength. My first take profit target is $126, which aligns with the 618 Fibonacci level. I'll trim a significant portion there to lock in profits. The second target is $173, the previous high. If we clear that, we enter price discovery. My third target is $249. Fourth is $372. And my final moonbag target for this cycle is $495, which is the 3618 extension. Here's how I manage the risk. Once we hit that first target at $126, I move my stop loss on the remaining position to my entry price. If we hit the second target, I move the stop loss up to the first target. This way, I'm guaranteeing a profitable trade regardless of what the market does later. And one final note on hedging. If Bitcoin decides to dump below $80,000 and drags the market down, causing us to lose that $65 support, I'll flip my bias. I'll look to open a short hedge targeting the $50 level, but only if I see an overbought signal on the Heikin Ashi RSI on the 2-hour timeframe. I'll keep the leverage low, just 1 or 2x, purely to offset the devaluation of my spot holdings. So we have a fundamental landscape that's more bullish than it has ever been. The UK government, the ECB, and major enterprise partners like Oracle are all moving forward with Quant integration in 2026. At the same time, the technicals are showing a level of compression that historically leads to triple-digit percentage gains. The game plan is simple: patience and execution. We are positioning ourselves before the crowd arrives. The crowd waits for the green candle to confirm the move. We buy the red candles that build the floor. The worst-case scenario is a break of market structure below $65, in which case we cut our losses small, roughly 23% risk, and wait for the $50 level. The best-case scenario is a breakout that runs to $495, offering a potential 500% upside. Those are odds I'm willing to take every single day of the week. We have to remember that we are position traders. We are not trying to catch every single wiggle on the 5-minute chart. We are looking to catch the meat of the move on the weekly time frame. This requires patience. It requires sitting on your hands when the price is boring and not letting your emotions shake you out. The thesis is built on regulatory clarity from the UK and massive technical compression on the weekly chart. I'm adding here between $70 and $90, protecting myself at $65 and looking for a run well into the hundreds. If you found value in this analysis and appreciate a strategy based on data rather than hype, make sure to smash that like button and subscribe to the channel. It really helps get this information out to more quant investors who need it. Also, if you want my updates faster than YouTube, I post my daily thoughts and chart updates in my free Telegram group. The link is in the pinned comment below. Come join the community. For your next step, you need to understand the broader market context that will allow Quant to run. I highly recommend you watch my last video on Bitcoin, where I discuss the path to $180,000. After this one, check out my macro outlook for 2026, where I break down the possible reversal in the gold versus Bitcoin chart. Both of those are on the screen right now. Much love for watching, never financial advice, and I'll see you tomorrow in the next one.